Well, good afternoon, everybody, and thank you for joining us on this call today. I'm Ben Bullock with Together SC. My colleague Desmone White is on here as well. And Sue, I see your question. We are recording this for posterity's sake because this is such a hot topic that's come up. Y'all have been asking us about it, and we are here to deliver on your requests. So, we're going to be talking about the employee retention tax credit today. And over the last couple of weeks, I've been talking with Brad Zaba, who has been in and around our network for a little while. He did a session for us at the Nonprofit Summit a couple of years ago on storytelling. And so he's got Mike and Joe here to talk with us about the employee retention tax credit and how you nonprofit folks are eligible for the employee retention tax credit, even if you got the Paycheck Protection loans. So Brad, Mike, and Joe are here to tell you all about it, and I'm going to turn it over to Brad Zaba to introduce everybody else.
Hi, good afternoon, and thank you for allowing us, Ben, to participate with Together SC today. I appreciate that. As you mentioned, I'm Brad Zaba with Access Communications, and our company mission for the better part of 2 decades here has been to uncover revenue sources for community organizations. And the ERTC program, which we're going to be talking about today, is just one such opportunity. And we believe as a company, Access Group that is, that no group successfully leverages resources like nonprofits. And so understanding and even perhaps benefiting from the ERTC is all the more important for you. So today I am joined by Mike Vinoy and Joseph Cardinal from Assure Software. So if you two would like to give a brief introduction, that would be wonderful. Mike, welcome.
Yeah. Thanks everybody for the time today. Appreciate it. My name is Mike Vinoy. I'm head of marketing at Assure. A couple things maybe about me and Assure. Assure is probably the biggest payroll company you've never heard of. We have over 90,000 customers, pay over 1.2 million employees. The reason many have not heard of us is because the majority of those clients and employees are managed through resellers. So not only do we serve clients directly, 15,000 clients, pushing 400,000 employees that do interact daily with the Assure brand, the Assure software. The majority of small business owners and employees interact with us through small regional payroll providers, Acme Payroll of South Carolina, Inc., for example. I just made that one up, but you get the idea. So we are a publicly traded company, and so the reason I kind of share all that is that we're big enough that we have the financial wherewithal to have meaningful resources to do things on national scale. We also have to operate under Sarbanes-Oxley and all kinds of other controls from a security standpoint. Personally, I've been in the human capital management, the payroll and HR industry for about 25 years. I started when I was 12, just kidding. But I've been in the space for a very long time, and I'm an entrepreneur. I grew up in an entrepreneur's home. My dad owned lots of small businesses, and small business was the topic of conversation at the dinner table. I personally am a partner in a handful of other businesses, sit on board of a couple, aside from my day job at Assure. So when it comes to the ERTC, this is something that I'm not a tax attorney, I'm not a CPA, but I personally have filled out the forms and done the spreadsheet calculations for my other businesses that I've been involved in. So I'll say I'm not a CPA, but I stayed at a Holiday Inn Express last night when it comes to ERTC. So hopefully I can share a bunch of information that might be meaningful to you guys today.
Great, thank you. Joseph, if you'd like to say a couple of words about yourself here.
Absolutely. Well, first, good afternoon. Joe Cardinale. I actually am local to the area. I'm in Fort Mill, Indian Land area. If you can't tell already, not from around here. I'm originally from New York, Long Island, New York. I know a lot of us are moving down this way. No, I'm not in witness protection, and I plead the fifth if I know anybody in the mafia. I have been asked that many a time, so I just joke about it now. Moved down here about 7 years ago. I'm, as mentioned, the area sales manager here at Assure, so I cover a lot of the Southeast and have 10 reps that report to me. I would be the main point of contact on anything that kind of transpires from here in any business. So at least now you have a face. I am local to South Carolina, obviously. So if you do need to meet in person, no problem hopping in my car and driving to wherever I have to help out things. As Mike mentioned, Assure is big based on small. We're big enough to be publicly traded, but we're small enough where we actually care. I know a lot of you might have heard of ADP and Paychecks. We call them Big Red and Big Blue in our space. And, servicing sometimes isn't the greatest. And that's where we come to shine, where about 5-10 years ago, we went more business to business instead of just reselling our software to companies. So look forward to this webinar, and hopefully, we could do business in the near future with some ERTC claims.
Great. Well, thank you. As Mike mentioned, we want to make sure are crystal clear here that none of us are tax attorneys. However, we bring a large amount of experience from the clients that we have helped, helped process refunds, and we've learned a lot from them. And they've ranged from traditional nonprofits like some of you are here today, as well as nonprofit daycare centers, churches of all sizes, rural and primary health centers, et cetera, et cetera. So we have seen a large number of requests and checks flow back and forth. So we do have some experiences that we'd like to share with you today. And so today's program is going to be a little bit different. It's going to be an open discussion rather than a formal slide presentation. And the reason we're going to do that is because we get hit with mostly the same questions over and over every day. And those are the ones that we would like to address so that we can clarify some things. So first off, let's take ERTC, Employee Retention Tax Credit. That's what that means. And you may also have seen it, Payroll Tax Refund. Okay, so Payroll Tax Refund and ERTC, we would say that those are synonymous. Those are interchangeable. It might be easier for you to remember Payroll Tax Refund here. And I would think we'd all agree on this call that this program is one of the most misunderstood programs that we've seen in a long time that's come down the pike. And, the misinformation is everywhere. You can't go a day without hearing something on the radio or TV or on the internet. So I would like to start out and let Mike kind of give us a quick overview of what really the ERTC is, what the purpose of it is, how it came about. We know it's had a couple of iterations. It's changed over the last couple of years. But Mike, if you can give us a thumbnail sketch of kind of where we stand with the ERTC at this point, maybe that would clarify some of the educational gaps that we see in the market.
Yeah, you bet. And I think so go back to March 27th, 2020. So the preceding 2 weeks, I think we all remember sitting through that, right? Watching the news and what is this coronavirus thing and how's it going to impact us? Some of us, depending where you live, you had shutdowns. Some of us did, some of us didn't, different degrees, social distancing requirements, et cetera. But on March 27th, the CARES Act passed. And so I want to say it was February 28th, I think, was the first death due to coronavirus in the United States. That was up in near the Seattle area, King County, I believe, near one of our offices. And so literally within 30 days, I think we're all kind of in panic, like what the heck's going to happen. And so by my estimation, the government made a very, very, very bold response, and I'm not being political, whether you love the response, you hate the response, I think it was too much, too little. We were just literally weeks into this thing, and there was an obvious fear in the government that U.S. economy could fall off a cliff, right? And not just U.S. economy protecting, rich folks, but what's going to happen with poor folks when there's no paychecks coming in, and how do you go to the grocery store? How do you buy food, right? And so the CARES Act passed, Coronavirus Response Act, Coronavirus Aid Relief and Economic Securities Act. I got it, my cheat sheet here. So that passed, and it had a whole bunch of stuff. But the two big things, the one of them that everybody knows about is the PPP loans, Paycheck Protection Program, and then ERTC. And so PPP loans, if you took a loan and you use that money based on the qualifying ways to pay your employees to pay payroll, it was a forgivable loan. It was by far the easiest to understand. The Small Business Administration managed this through all of the banking systems. So small businesses, profit or nonprofit, had generally banking relationships. You got a bank account that you run your payroll from, and maybe you got a line of credit and business loans, etc. And so those relationships already existed. And so it wasn't just some national program that came out. There was local bankers who could explain it to you. And you fill out the application, you get money within a couple of weeks, and it was by far the fastest path to the money. At the same time, the employee retention tax credit was part of the CARES bill. But the difference was, I shouldn't say the difference, a key element was that you had to choose. Either you're going to apply for employee retention tax credit, or you're going to take PPP loan. I'd say on March 27th, we were all still thinking, hey, 2 weeks we shut down the country and bend the curve. Nobody knew this thing was going to go for 3 years at that point, right? And so it was a land grab for PPP loans. And by definition, if you chose PPP, you excluded yourself from ERTC. Well, this thing starts to carry on, and something really important happened December 27th that year. The CAA, Consolidated Appropriations Act, that was like one of the last things coming out of the Trump administration. Part of that budget bill that passed on December 27th said, okay, retroactively, even if you took PPP loans and had that forgiven, you could now apply for ERTC. So all of a sudden, but the problem at that time was that same CAA, Consolidated Appropriations Act, it introduced PPP round 2. So again, PPP round 2, to me, it sucked all the oxygen out of the room. And so small businesses, bankers, CPAs, certainly the press, and the media, the focus was on PPP once again. And as a result, I think ERTC to this day probably remains the biggest hidden secret in small business. In the way the guts of it work is this: you can retroactively, this is part of the change of CAA, you can retroactively apply for these tax credits, and it is just a tax credit. So just like if you're gonna fill out your own personal tax return, right? So everybody's getting their W-2s in the last couple of days here. You claim a deduction, right, on your tax return, that you might get a refund check. It's exactly how this works, except it is a tax refund based on the employer portion of essentially FICA, right, of your federal employer taxes. But it's simply just a tax return. And so just like you or I could, we could amend our personal tax returns, right? Hey, I just realized I forgot to claim mileage for my 2020 taxes. I got a 3-year window that I could retroactively, I could work with my CPA, or if I know how to do it myself, I could file the amended return and I could get that tax credit, right?
Okay, Mike, if you don't mind, so here's one of the questions or the misconceptions, and I'll maybe point out is so what you're saying. Let me make sure that I understand and hopefully clarify for everybody else. One of the misconceptions is I received either 1 or 2 PPP loans, hence I'm not eligible for the ERTC. As of the change that was at the end of the year of 2020, that is no longer correct because of the retroactivity of the ERTC application, correct? So if I got 1 PPP or 2, I still am in the running for at least part of the ERTC credit. Is that right?
Taking a PPP loan does not preclude you from ERTC. You still have to meet the ERTC eligibility requirements.
Right, and we'll get that in a minute. Yeah.
But absolutely, taking a PPP loan, the only caveat that, and this is really important, hopefully this is obvious, The government was not about to give us, hey, take this $100,000 to pay your employees in Q3 of 2020. Oh, by the way, you can also apply for a tax credit on that same period that we just gave you free money for. So the term we use is double dip. So you can't double dip in the PPP money. You can't apply for ERTC tax credits for the exact same pay periods that you're paying employees that you got PPP forgiveness for.
Right.
But you can absolutely, and most clients do, still get ERTC tax credits, even though they got PPP loans and they were forgiven.
Okay, because one of the questions that I also get when I talk to potential clients is some fear of the IRS looking at these requests and so on, and the IRS in many cases is not crystal clear about some of the rules here, but one of them that they go out of their way, as you just mentioned, say be very, very careful, and they do call it double dipping. If in fact you received a PPP loan, please make sure that there's some intricacies here that affect the amount of money and the any eligibility, date-wise for ERTC refunds. And I would say that that's one of the things that requires or would be very good idea for an organization such as yours, who's been around the block on this many hundreds of times, to preclude any double dipping, because that would be a red flag for the IRS and relatively straightforward for them to ascertain that something is not correct, right? And that's not a good thing.
Brad, if I can maybe just kind of walk through a simple math exercise to just bring to light. So let's say you had a PPP loan, let's say round 2 PPP loan in Q1 of 2021. And let's say that loan was $100,000 and you got it forgiven. But your entire payroll of eligible payroll for Q1 was $250,000. All that would mean is you got a $100,000 PPP loan forgiven. So your $250,000 in payroll minus that $100,000 PPP, you got $150,000 you're eligible to apply payroll credits for
Okay.
Q1 of 21.
But your example is just be careful, make sure you subtract that $100,000. Okay, gotcha. Now I'd like, if you could, Mike, and Joe, we'll get to you in a second here, but it also is my understanding that there are two general ways to qualify for the ERTC. One of them is, of course, we hear that all the time. Again, here's the misconception. I didn't lose enough money to qualify, and they may be talking about fiscal years versus quarters, if we can get into that a little bit. And the fact is that there is a second way as far as how it would affect your service. Can you go through that with us? Because this is really the meat and potatoes of how this refund flows.
I think you hit the nail on the head, Brad. I think a lot of people, it's pretty black and white. There's two qualifications here. And a lot of people look at qualification number one and said, oh, I don't qualify. Qualification number one is based on what the IRS calls gross receipts, call it revenue, call it sales. And so you compare your and it's different for 2020 versus 2021. If in 2020, quarters 2, 3, and 4, if you compare that against the same quarter in 2019, if gross receipts or revenue dropped by 50%, period, you qualify.
Comparing quarter 2 of 2020 to quarter 2 of 2019 and 3 and 4. Okay.
And then same approach, but a much lower bar for 2021 is if your gross receipts drop by 20%. So if your revenue is 80% of the same period in 2019, because you got to go back to pre-pandemic. So you're comparing to 2019. So it's a 50% reduction in revenue in 2020. It's a 20% reduction in revenue in 2021. If either of those things happen, you qualify. Okay.
Okay. All right. And so it's quarter over quarter, always using 2019 as the comparative figure. Okay. Because I've heard
looking at pre-pandemic. That's right.
I've heard nonprofits that might have gotten a tremendous grant or loan or donation or something in one quarter, let's say of 2021, and it was a huge amount. And they went, no, we had a great 2021 because we got this large, but it was the first quarter. Right, that had nothing to do with the second or the third quarter, so it's quarter over quarter. Question just came up. Does that include when you're measuring your revenue there? Does that include PPP money that you got for that quarter?
No, because PPP is a deduction of your expense. So PPP, if I got if I had $100,000 in payroll and I got a PPP loan forgiven for $100,000, I've just lowered my expense by that $100,000 because it's a forgiven loan. So the answer is no.
Okay,
So
right.
Brad, the part, so there's two parts. So we talked about the first part, which is if your revenue gross receipts decline, right? 50% 2020, 20% in 21. The other one, and this is the huge one, this is where I think so many people don't understand it, is if there's a disruption in your business, and I'm literally going to read, this is right off of the IRS website. According to the IRS, businesses who experience, I quote, partial suspension of the operation of their trade or business during this period because of governmental orders limiting commerce, travel, or group meetings due to COVID-19. So part number one of that, it can't just be, hey, you know, things were tough, everybody was freaking out, no one knew what was going on, and therefore we had to change our business in such a way that we were quote unquote impacted. That doesn't qualify. There has to be a government order. So for example, if you are like, I live in St. Louis County Health Commissioner put in social distancing requirements. If I had an office that all of a sudden I previously had 10 people working out of and had but to meet the social distancing requirements, I couldn't get more than say 4 or 5 people in. That means that there's a government order that restricted or modified and quote unquote impacted my business. I qualify, even if I don't have a reduction in gross receipts. Because remember,
Gotcha.
Yeah.
And there's confusion too, because one has nothing to do with the other. These are mutually exclusive paths to qualify for the ERTC, correct?
Correct. You don't have, it's one or the other, it's not an and.
Right. Okay. Because we've seen it. I mean, like locally here in Columbia, there's some carry out chicken places or whatever that made more money, totally disrupted by lines being around the block, and they may never go to inside. Now that was a disruption regardless of whether or not they made more money during that particular quarter. So that needs to be separated. And on the screen, here's some examples, and through my experience with nonprofits. You know, I'm sure that Ben will confirm this. Sometimes it seems like it's nothing but preparation meetings, planning meetings, going on sites, right? Having fundraising campaigns at organizations, at companies, and those were disrupted. Sometimes they still happened, but they were disrupted by 50% or more. And there are quite a few governmental state restrictions that spanned a large period of 20 and 21 that are directly relevant to this that we can review and you know, at a later date, you know, offline. But here are some of the examples that you may or may not have run into in your nonprofit.
One more thing I want to mention too is, as Mike said in his introduction, we're a publicly traded company. We've done thousands and thousands of these ERTC claims. And we're actually the back office for several other ERTC companies that you may hear on the radio or TV or wherever, ERC Today, Innovative Refunds, so on and so forth. So we've done a lot of them, and these are the more popular ones that we've come across in our filings. Personally, I've done well over 150 of them in the last year with about $30 to $40 million in refunds. And from this list, I'm sure one or more would apply to most businesses, including nonprofits. Which
can you?
If I can, I just wanted to chime in for a moment on something about the lost revenue from one quarter of 1 year to the other. For those of y'all who did the CARES Act grant application from the state government, it feels like it was 100 years ago now, but it was only like 2. If y'all will recall, we worked with the state legislature to get that grant funding, and one of the requirements in that odious application was submitting information about lost revenue from one quarter of 19 to the same quarter in 2020. So if you did apply for that grant and you still got all your documentation for it, that may be useful to dig back out.
Right. And we're getting a couple of other questions here. Here is one, Mike, if you want to address this. So what are we talking about as far as potential refunds here for 2020 and 2021? I know the amounts are quite different. Can you outline that for us, please?
Yeah, so 2020, it's up to $5,000 per employee. Okay, now that covers Q2, 3, and 4 combined as a single unit. So you can have up to
Okay, so applicability is quarters 2, 3, and 4 of 2020. Gotcha. All right, $5,000 maximum per employee.
And then it got much. The stimulus ratcheted up a whole bunch in 2021 as the government saw that, hey, this thing's lasting way longer than we expected. We need to prop up our small business community. It went to $7,000 per quarter. Originally, it covered all 4 quarters. It eventually one of the pieces of legislation backed a quarter out. So it's 3 quarters. It's Q1, Q2, and Q3, $7,000 each. So that's $21,000 in 21, $5,000 in 2020. So it's up to a maximum of $26,000 per employee that's eligible.
Okay, so that combines both years. So as a quick example here, just so my math works. So if I've got a PPP loan 2021, and let's just make it easy here, it completely took care of my payroll for the first quarter of 2021. So I take that off the table. Now I still compare the second and third quarter of 2021 for either business turndown, if you will, to see if it qualifies but a 20% reduction, or if it qualifies based on what you have on the screen here as an interruption. So it sounds like you have many clients that may qualify not for all 3 quarters for each year, but maybe 1 quarter or 2 quarter for each year. So from either 1 through 6 quarters, is that right?
That's right. So
yeah, we have a lot that qualify based on partial quarters. From what I see on the norm, first round was either late April or early May through about, end of July, early August. And then round 2 was usually end of January, early February till about, end of June, early July. So yes, partial quarters do qualify for this. So out of the 6, you could get 4, you could get 3, you could get 5. It all depends on the length of the loans.
Okay. And then here's a couple of questions that came in. Is it too late to qualify?
It's a hard no. So just like you could amend your own personal tax return, there's a 3-year statute of limitations. That statute of limitations for the ERTC tax returns modified forms is 5 years. So 5 years post Q2 of 2020. So there is still time. What I would say, however, is A, it's a tax return. B, legislation has updated this thing several times. So it started with the CARES Act, Consolidated Appropriations Act in December of that same year, changed it fundamentally. Biden administration, their first major legislation was ARPA, that changed it fundamentally. Later that year, the infrastructure bill passed, that changed it fundamentally. I'm not making any predictions, but history would say there's a good chance this thing could change. I would probably personally be thinking about doing my evaluation, getting this thing done within the standard IRS 3-year window.
Okay, so rather be safe than sorry.
And in a 3-year window, Q2 2020, my 3-year window's pretty quick here, right? So
right. Okay. All right. And I know that this is tough, Joe, but once the paperwork is submitted, these are actual checks that we're waiting for. We're waiting to go to our mailbox and get checks and deposit them, correct? And so what are you seeing at this particular point? And I know we're not going to hold you to this because it's the IRS, but what are you seeing?
Yeah, we're seeing right now a 3 to 6 month range, but as we know, we're coming into tax season, so that could extend it even further. You do get live physical checks, as Brad mentioned. So if you qualify for 4 quarters, you will get 4 separate checks, 1 per quarter. They could come all at once, or they could come at separate times. Fortunately, it's the IRS, and they don't have any clarity. We've asked, and they don't have any clarity either on their process to say like, hey, 2020 goes first, then 2021. I've had clients get all their checks at once, and I've had clients get several checks up front, and then 2 months after get their last check. So I wish I could give a better answer, but it's usually within that 3 to 6 month, but with tax season, it might be a little longer.
Yeah, Brad, you said it. To be clear, this is not a check from us. We have no control. This is literally the IRS. When are they giving you your check for your tax refund? So
and yes, and checks are different than what we're used to, electronic deposits and so on, which are always a little bit more expedient. Okay, Joe, I know that we offer an upfront service, which is an estimate. Can you briefly inform us as what information that you would need to give a free estimate to see if this exercise is worthwhile for a potential refundee?
First and foremost, we spent a lot of time on it, is we need those PPP loan covered pay periods. So if you look at your PPP loan forgiveness application or form 3508EZ, that tells you what your covered pay periods are. From there, we carve out those dates and we say, here's where the dates, date ranges or quarters that you might be eligible for. And then we ask for the payroll information for those quarters. We do a quick estimate. So it's definitely not going to be an exact number. It's just a quick estimate. What I do personally is if somebody made $3,123, I just round it to 3,100 so I could get some numbers to you to see if it's even worth your while to want to move forward. You know, I've gotten clients back as little as $15,000 that wanted to move forward, and clients as much as 1.6 million. The average, though, that I'm seeing is around the 150,000 range.
Okay. Well, it strictly depends on number of employees and so on, correct?
Correct. Number of employees and how much they're getting paid.
So
obviously, if they're getting paid more than $10,000 in a quarter, then they're going to get the max of either $5,000 for 20 or $7,000 per quarter in 21.
Okay. So if I can get in your hands payroll by employee by quarter for the relevant quarters and the PPP information, you have a pretty good shot at getting an accurate estimate.
Yeah, each company calls it something different, but it's along the lines of an employee payroll summary or an employee payroll history report.
Okay.
I've worked with many companies that use the payroll vendor and they just provide like their username, password. I could go in, pull those reports and kind of take that burden off of you. Or if you use QuickBooks, I believe it's called the employee payroll summary report. So more than happy to work with anybody to kind of figure out what reports those will be if the time comes. Okay.
Now I've had 2 of these questions. We'll bunch these and then we'll have a couple more and wind this up here. There has been some misinformation. Well, at least I shouldn't call it misinformation. There has been some innuendo that clients have submitted their requests for their refunds, and those are being denied. Have you heard anything? I'm not aware of any front end filters per se. Has that been an experience that you've seen?
I have not seen any of the ones that I have done or been involved in. And as far as I know, as a company, we have not had anyone be denied refunds. Like Mike said earlier, they're kind of issuing it like a refund to a personal. So I don't know if Mike, you might see it on a bigger scale.
Let me take that. I mean, it's a tax. It's an amended tax return. That's all it is. In this case, it happens to be the quarterly 941 employer tax return. Just like you'd have your business tax returns, you have your personal tax return. It is an amended tax return. So when if I in my use case that I shared earlier, if I forgot to pull off my mileage deduction So I file an amended return with that. The IRS is not gonna, that they're not sending an agent to my house to look at my odometer, right? I am subject to an audit.
Right.
If I was to be audited, that I need to be able to provide the reasonable documentation and verifying that deduction that I claimed in my amended return.
Right.
There is no such thing as a filtering staging process. Hey, let me really make sure. They don't have any way of making sure that this information is true. You are personally liable for supplying accurate information the same way you are in your tax return.
Right. Okay. So with that being said,
Real quick, Brad, somebody did mention, like, would you advise getting a consulting or with legal or accounting counsel for eligibility? We do have clients that do that. You know,
Sure.
They just want to make sure they're taking the proper steps. By all means, if that's something that you want to go through, by all means, go through it. And you know, kind of maybe help you sleep a little bit easier at night.
Well, the other part of that equation is the fact that we have many accountants as clients, right? Not only their business, but recommending us to many of their clients through referrals. Some accountants, as we know, there's a lot of specialties within the accountants umbrellas. Some are more familiar with this. There's a lot of accountants that are not familiar at all with payroll. So yes, I would recommend whatever makes you feel comfortable, but be careful in that not all accountants or all. As a matter of fact, we have done some business with a bank in South Carolina who was a distributor of probably more PPP loans than any bank for mid-sized businesses that we were aware of. And they were completely in the dark about the ERTC program at all. That's just not what they were familiar with. So be careful with the outside consultation you get, although we would recommend, obviously, you feel as comfortable as you can. And the other part of it is, no, I don't think, and again, then we have one other question after this, then we have to start wrapping up. Are you aware of any of our clients that have had post receipt of their refunds? Have they been subjected to audits? I haven't heard any of them at this point yet.
No.
And again, I would say the number one red flag is double dipping. That might be something that you want to
double dipping and employees. I'm sorry, not employees. Ownership and family members, because those wages don't qualify as well, which I don't think would really
apply to nonprofits.
Yeah, I was gonna say wouldn't really apply.
Can I interject with the question? When it came to the paperwork and the reports that y'all were talking about, that sounds a lot like the same reports we had to pull for the PPP loan applications. So if we still have all that documentation from our PPP loan applications, could we submit that for the ERTC?
It's probably going to be partially.
Yeah, exactly.
You probably, so for example, if you applied for PPP, people applied for PPP early in the process, right? So PPP 1, you probably applied in April or May, maybe June. You still had the rest of 2020. People probably applied for PPP round 2 in Q1, and there's still Q2 and Q3 wages, but it's the same approach.
Okay.
Yeah, so like Mike was saying, with the PPP, I think they're taking the whole scale of it, where we have to carve out those loan dates. So it's not exact science, but yeah.
If I could also, I just want to take a second, the question, Brad, around getting outside, counsels, talk to your CPA. Here's my advice. Whether it's with somebody like Joe or anybody, you can hop on our website, assuresoftware.com/ERTC. There's all the information there. Go through a process and just get an estimate. And some folks what you might find out that you don't qualify. And so this is a non-issue. I wouldn't pay a tax attorney or a CPA for something I don't qualify for. So go through and give your personal best assessment, and then get an estimate for how much this is worth. If you're talking about something that maybe is a $10,000 or $15,000 potential tax credit, that might be very different than if you're looking at a $1.2 million tax credit. So I mean, for sure, we're a very large, small employer. We qualified because we were under 500 employees, but we're talking a lot of money that we got. It's public information. You can get, you can see it because we're a publicly traded company. But we went out and paid a tax attorney to give us a formal opinion. But we're talking about a lot of money coming back to us that we just wanted to be super black and white, crystal clear. But if it was going to be a $5,000 return, I can just tell you in my own personal business, I'm thinking there's no way in heck the IRS is going to audit me over a $5,000 return. I'm not a fan, so I'm not going to.
Well, and then there's the question of effort to return. Now, okay, so let's get to let's get the costs, and I'll take a stab at this, and Joe can help me out here. So the process really would be, and Ben, as you mentioned, PPP information, quarterly payroll by employee. Those 6 quarters 2, 3, 4 of 2020 and 1, 2, 3 2021, and we could figure out the eligibility, give an estimate. There is no cost obviously to do that. Now you're going to, what Assure does is actually puts together the forms for submission for each of those quarters. Is that correct? And submits those. So Joe, if you want to take it from there as far as fees, because we're getting questions on, hey, how much is going to cost us?
So I'm sure by now most of you probably looked into it, and the cost was pretty high, 20-25% of whatever your estimated recovery was. So if it's 100,000, you're looking 20-25,000, looking for it either upfront, half upfront, half on the back end. So since we are a full service HCM company, what we do is we actually bundle it with our HR package service. So we get a basic service, and then it's only 12%. That 12% is not due until you get paid. So therefore, there isn't that liability of those other companies where I think another question was like, hey, do I have to pay or something like that? Well, that 12% is not paid until you get paid. So it's significantly less than what you might be hearing on the radio from those other companies that are charging somewhere between 20 to 25%.
And now that 12%, for instance, we do have clients that's checks have been separated for 3 months, 6 months, or whatever. Yes, the 12% is due on the quarterly refunds. So the quarterly refunds is spread out over on the IRS decides to mail them 6 or 8 or 10 months apart. No, we're going to be invoicing when those are received.
Yeah, we track that all. Let's say you qualify for 4 quarters. And one of your quarters is really big and you get that check first for whatever reason. Some clients just pay that 12% from that check because it covers that and then some. And then, or you can just pay it as your checks come in. So we'll more than happy to work with you on that.
And the last thing here, and I know this might help a little bit, but so one of the things that we could is a one-stop shop here from Assure, and I've been working nonprofits a long time in the state of South Carolina. I know a lot of the people at the organization, and when I looked around, I was very hopeful that some of this money could find their way into the nonprofits, because as I said before, this is a terrific opportunity to serve the underserved in our communities, which is what nonprofit groups are all about. So I thought it most important to look for a company that had the highest level of fiduciary responsibility, which is why our group partnered with a public organization. Generally speaking, all things being equal, they are under more scrutiny for a lot of reasons than some of these organizations that are essentially nothing wrong with it, but doing this in a very small staff, doing this individually. So that was the reason I went with Assure. And they had mentioned also this week, or I think it might have been last week, Joe, just a quick one-liner or two. There's a new form out that we are going to be getting with the right up front with the paperwork that hopefully is going to allow us to track these refunds a little bit closer. Is that correct?
So as far as paperwork goes, once we have obviously the PPP dates and the payroll, obviously it's a signed proposal, and the form you're alluding to is the 8821 that allows us the power of attorney to kind of contact the IRS for updates on check statuses, as well as the basic bank information, so like avoid a check or something. I do
Okay.
want to mention also, I do see here, just so another question on here on the chat. What are the requirements for an actual quote, employee retention, meaning if you furloughed? So for this program, it goes based off whatever the employees were that you had during that time that were receiving checks. So if you had someone furloughed, but you weren't paying them, those wages wouldn't count for ERTC, is my understanding. It's only for those wages that you paid during that time frame that you would qualify. Is that accurate, Mike? So,
And then one last thing is a company size. I don't know if we hit this, but it's 100 employees for 2020 and less than 500 employees for 2021. So that, I believe, is one thing that was hanging there.
That'll be
yes,
most nonprofits.
Yeah, I was gonna say, nonprofits it might not be a problem, but then again, 2021 is significantly more money. So
right. So
works out too.
if we could do somewhere up there, I think we my name and phone number and email address if you want to go ahead and forward questions, comments, requests, something like that. Can we get that put up? If not,
and while Desmond is pulling that up, I want to draw attention to Lelia King's question about Lelia. Amy Larkin's question about the distinction between revenue per books and actual collected receipts. Because the Form 990 and this may actually, as I'm thinking about it, as I'm saying it, Amy, this is a tax return on your payroll taxes, not with your 990. So I wonder if that factors into it. But are we talking about actual paid receipts, or are we talking about revenue per books? In the distinction and determining your
eligibility?
whether eligibility for loss, even though there are other ways to become eligible.
So I'm not trying to be nifty in my answer. If you go to the IRS website, the term that they use is gross receipts. In most companies, that's going to be revenue recognition. So depending whether you're accrual versus cash based, again, I'm not a CPA, but it ties to revenue recognition and revenue.
Amy, I would say check with your CPA on that, because if those are invoices that you later wrote off, maybe there's a way to get around that.
Right. And I do get that question, but we filed 990s. It's like I understand that, we get that, but that, think of it as payroll tax refund, and maybe that a little straighter than all these acronyms and letters and that the IRS and the government likes to throw at us. So hey, yeah, there we go. So thank you for attending. Any questions, comments, needs, critiques, whatever it is, please give me a call. I as well. I'm very likely have run into you sometime in the last decade or so. Again, our heart, or my heart personally, and our organization, we want to get resources in your hand. Nobody does a better job with those resources. We want to get them into the communities. That's what we're here for. And we think that you do a great job of leveraging whatever resource you had, and that's the idea behind here. We'd hate to see you leave something on the table that could be better served and better used in the community. So with that, I would say, Ben, thank you so much for your time. Mike, thank you. Joe, thank you. And we stand ready to be of any service that would.
I am actually putting my contact also in the chat, as a couple of people have messaged me.
Aha. Okay.
Excellent. Thank you so much, Joe and Mike and Brad. And thank you all of you for joining us today. As I said, this webinar came about because y'all kept asking us about ERTC, and we said, okay, we gotta talk about it. Because like y'all, we thought, oh, this doesn't apply to nonprofits. until we discovered that it does, in fact. So,
Or we weren't down that much money, or we got a
yeah.
PPP loan,
Yeah,
right?
absolutely.
And
Absolutely.
so if there's any doubt, give us a holler and we'll be happy to steer you in the right direction. In the meantime, Ben, we'll be looking forward to getting a replay. I know you guys are busy, but when that gets up, send, and we'll be more than happy to answer any questions in the meantime.
Absolutely. Have a great day, everyone.
Okay, thanks again. Appreciate
Thank
it.
you all. Appreciate you.
Bye-bye.
Bye-bye.